We already learned about fake out. And then next we will learn about another chart pattern, a reversal chart pattern or a price action, what we call as a compression. Okay. We already learned fake out. So as our flip later, as our flip is quite easy. We learn compression because those Malay teams, they already learn about compression and CPLQ. CP and CPLQ. What is a compression? Compression is a price action that compress the price. Compress the price. Oh, for example, like let me draw this. Excuse me. Okay. It's already full over here. Okay. Let's suppose that, can I continue here? Can you continue? Okay. Now, let's suppose that you have a supply zone on top of this. Let's suppose that we have a big drop, a price that have a big drop down below. So let's put that you have a supply zone, a base over here, a supply zone like maybe a drop base drop or a rally base drop. This is your supply zone. This is your supply zone. Price going down heavily. Suddenly, let's put price going down over here and then price going up a little bit by bit. It goes like this. When price going down and then going up, this below around here is a demand zone. This is what we call a demand zone, a drop base rally. Okay, drop base rally. And then let's suppose that price going down again, it takes an order over here and going up again. Actually, what happened is when price going down heavy like this, there are a lot of unfilled orders. Unfilled orders around here. For example, like this, it should be a sell limit. Some people put sell limit orders, but it is unfilled, it dropped heavily. The same thing like this. When price going up like this, there are unfilled orders over here. So in this case, it's the buy limit. And this buy limit is what we call a demand zone, a drop-based rally. This unfilled order sell limit is a supply zone. So if price going up, there are unfilled orders over here. So let's suppose that if price going down, touch this unfilled order buy limit and going up again. So what it did actually is the price fill that buy limit orders. So when the buy limit trigger it is already filled. When it is filled, your demand zone will become empty. In Malay, we call it empty. I mean, it is clear. The demand zone should be clear because the price has taken these orders and it's going up. So far, so good. And then when the price going up, this is also a demand zone because this is a drop-based rally. This is also a demand zone. Let's suppose I put as a demand zone number 2. And the below one is demand zone number 1. Yes, it goes up. It takes all the demand zone and going up, going up, going down. So let's suppose that we have a price action like this. Price going up, going down, and then it is going up again. It's going down again. It's going up again and going down again, going up again, going down again, going up again, going down again, going up again, going down again. While it is going up, what it did is the price is clearing the demand zone. We have demand zone number 2, number 3, we have demand zone number 4, we have demand zone number 5, demand zone number 6, demand zone number 7, demand zone number 8, and demand zone number 9. This is number demand zone 1, 2, 3. This is your 3. This is your 4. This is your 5. This is 6. This is 7. This is 8. And this is 9. So you have 9 demand zone. From 1 to 8, all this demand zone has been clear. Clear because price going down, touch the zone and fill the orders. So there are no more orders over there. It fill. The demand zone become empty. This one 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 empty. But we still have demand zone number 9. Why? Why? Because it is not yet touched. So this demand zone number 9 still available. There are still orders over here. So in supply and demand rules, it says that when when demand is higher, where is the sign? Is higher than supply, what happened to the price? Price will go up. When people want to buy more than people who want to sell, the price will go up. The same thing, when supply is higher than demand zone, so the price will go down. So this is the basic rules of supply and demand. But in compression, there is a special case where when your, let's suppose in this case, your supply is high, but the demand is empty. What will happen to the price? The price will, we call it shunam. We call it not only go down, but it straight go down. What is the best word for this? Dive, yes, dive down. Okay. Okay. So it will dive down because let's suppose that somebody sell, let's suppose that the big trader will sell. Of course, the price will find a demand zone. But if there are no demand zone here, all the demand zone already clear, so what will happen is the price keep on moving down, 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 down in a straight line. So it's like a dive down. So this is what happened in compression. This is what we call a compression. But let's suppose that the price continue going up over here. It already reached a supply zone. So there are unfilled orders sell limit. The price going down like this. It will go down. And then now number 9 already touched by the price. Already touched by the price. So number 9 also clear. Now we have a totally empty demand zone. Okay. If you follow this rule, the demand zone is already empty. But the supply is high. How do we know that the supply is high? The supply is high in two conditions. One is during news, during big news. Okay. And number two is when we have high liquidity area. Okay, now we discuss about the first during big news, right? So usually what happen during big news is that all those investors, all those bankers, all those this is when they enter the market. They don't simply enter or entry during every single day. No, they just wait those moments. They wait for big news, big financial news for those countries or those currencies like US dollar or GBP or Australia. So they wait for those moments like announcement from government so that during that news, during big news, then only they will enter the market. But when they enter the market, they don't enter with a small amount of money. They put million, like billions, billion of money. So that is when we call a supply is high. Okay, when the supply is high. So let's suppose that the big trader want to sell. There are news over here like or maybe NFP or maybe any big news or a big news over here. If the big traders sell the market, what will happen is price will find those who want to buy. Remember that when you sell the market and your order is big, the price must follow the orders. It will find a demand. But here, there are no demand. What will happen to the price? It will go lower. Since number 9 already empty, it will go down. Now it look for demand zone number 8. Number 8 already clear. So it goes down again. Looking for number 7, but number 7 already clear. It goes down again. Looking for number 6, number 5, number 3, number 2. Let's suppose it cannot find the demand zone. So this is when the compression works. It going straight away like this, a dive down. Okay, so this is when you want to use this as your strategy or entry. So far so good, understand or not? Compression is like going up with staircase and coming back down with escalator. Yes, exactly. Going up like a staircase, one is very hard, very tiring, very hard. But when it goes down heavily like that. Just one single candle, just like 2 single candle. So this is where you want to put your orders. For example, this is where we want to take our entry. For example, you have to look to the left when the price going up like this, like this, and then you have to look to the left. Always look to the left. What do we have over here? You need to find a good, maybe you can find a supply zone. Maybe you can find SSR King, or maybe you can find QMTR King, or maybe you can find any whatever level that, or QM level, or whatever a reason, QM level, so that we can enter the market. Yes, left side look for King, QMTR, QMC, or QMR, whatever we already learned, because this price action is very, very excellent one. Okay, so for example, I give you one example like what happened to GJ last week. Yeah, GJ. Okay, let me clear this up. Okay, like this. You see the chart? Yes, like New Zealand JPY on daily. So GJ, we have like a demand zone over here, a demand zone, Price going up and then going down. It touched the zone. Here already touched. So this demand zone already clear. And then it goes up again. It goes up, it makes a demand zone. But this demand zone has been touched by this shadow. So the demand zone already clear. So, and then price going up again. Over here, you have another demand zone touched by this shadow. And we have another demand zone here touched by this shadow. So you can see clearly that if you drag a trend line on those support, you can see that the price moving like a staircase is going up, going down, going up, going down. It is going up. While it is going up, it is clearing the demand. You understand? And then this is where we want to find our opportunity, because all this demand already empty, it's been clear. So what you need to do is you look to the left. What do we have over here? You have a QM level like high, low, higher, high, lower, low. Or if you change your time frame, you can find a supply zone. This is your supply zone. A really base drop. If you go to smaller time frame, you can find a QM level just around here or a price cap. But over here, you can see clearly it is this is what we call compression. So suddenly last week, Friday, Japanese yen, they have a news. It's not in the Forex Factory news, but the cabinet of the Japanese parliament decide to like buy the bond or whatever. I don't know about this. I'm not sure about this, but it clearly says that people believe that JPY will be strong. Okay, so investor all buy Japanese yen. When they buy Japanese yen, all the pair of Japanese yen going down, like GJ, like UJ, like CAD like this. You see, CAD This is all compression. Compression is going straight away, going straight down, going straight down. But GJ is clearer. So I just choose this GJ as one of the example. So when price hit this supply zone, remember our stop loss is always above the supply zone. In this case, we have like 30 or 35 stop loss, 40. But after that, what happened is price dive like Pandalela, straight away. Straight. Because there is no more supply or demand zone over here that can hold the price. But remember one thing. During your marking on this demand zone, you need to find clearly where sometimes you can find a gap between this zone. There sometimes the shadow do not touch this demand zone. So there is a little bit demand left over. For example, like if I change to M5 in GJ here, you have to watch out for a gap. A gap is where a demand zone is still there, or what we call the buy limit is still there, because the price, the shadow, failed to touch the zone or to clear the demand. So in this area, usually price will bounce back. For example, like this, it goes down here, it goes down, and it touched the demand zone, and then it bounced back. So this is very, very dangerous. In this case, it bounced back just a little bit, and then it continues going down. But sometimes it bounced back all the way up. So make sure that your demand zone is clearly, everything is very clear. I mean, you draw it very, very carefully. It's not like just drag or something like this or whatever. You need to clear. I mean, you need to draw it perfectly where there are no gaps. If there are no gaps, then most probably the price will go down easily. Okay, Pawan asking, sir, but for entry we will wait deep, then we don't get entry. What do you mean by deep? For example, like CADJPY, we have like this compression price moving compression here, and then you look to the left. If you cannot find anything, then no need to entry lah. If you find a good level, then this is a good one. This one later I will teach about CPLQ. Highest cap price. Yes, we did. We want to entry with the highest cap price. You can see over here. What you need to find is, just now we learned about cap price or price cap. We have a cap level high, low, high, high, low, low. This is your price cap. Then this is a good place to sell. Then after that, if you are very confident, you can put a sell stop order over here. Sell stop, sell stop, sell stop. But I don't know if you can do this, because Malaysian or Asian trader, they love to trade with layer. Do you guys layering or not? Or just with single entry? It is advisable for you to use a single entry, not layering like Malaysian trader. They are crazy. Yes, one big lot and then take the TP. Single entry is much safer. Okay, so I don't need to teach about the layering things. It's very, very dangerous. Only Malaysian trader can do this. Okay, so far so good. This is compression. Compression, if you continue or draw this support, it will make a pattern like, will make a rising wages pattern like this, a rising wages pattern. You know rising wages pattern? It's going narrower and narrower until the maximum part. So the maximum part you have to look for this price cap or whatever, QM level or maybe QMTR or maybe whatever. Okay? So far so good. Okay, if it's good, there's no question, then okay, the teacher, let's say SSR King is on the minute F15. Would you also look at H1, H4 to make sure we are not inside the higher time frame area that could rule the... Of course, yes. Whenever you do an entry, you must analyze from a bigger time frame first. For example, like maybe H1 or H4, you need to see the bigger picture. You need to see where are the major support, where are the major resistance, where are the only thing I use, sometimes I use M15 or smaller time frame or M5 is because of I want to show clearly that it is a fake card with a CP with in one single screenshot. Do you understand what I mean? For example, like if I use H4 only, let's suppose I use this H4. So what I will teach you, what I will show you over here is a compression over here. It is not clearly visible, right? It's not clearly visible. So very hard for me to tell you the story. But if I change to M15, a smaller time frame, then you can have a better storytelling. Even you need maybe smaller M5, but no need to go to M1. There's no need. M5 is the best. The smallest one. Okay. If okay, then I go to our last part today, which is the CPLQ. Previously, we learned about compression, where there are big news, during big news, because we want to make sure that the formula of compression is fulfilled. Remember this, First, for compression cell, the demand must be empty. and the supply is high. But the supply is high, we have two conditions. One is during big news and one is at the high liquidity area. What is the high liquidity area? Let me padam balik this. For example, like, let's suppose that you have this. The price is going to our supply zone. The price is going up like a staircase. Suddenly, there are no news nearby. There are no news in the near future. But the price is making a fake out. We have R1 and we have R2. So this is a chance of a fake out setup. When people see R1 and R2, what they will do again, they will sell again over here, sell over here, sell over here, sell over here, chase the market, sell over here. Where are their stop loss? Of course, above resistance. Above resistance, we have a lot of buy stop orders. Suddenly the price going up, fill the orders, stop loss, and then triggers all those buy stop from those breakout trader, and then it goes down. Why this happen? Because at this area, there are a lot of buy stop orders. These buy stop orders give liquidity to big trader. And this liquidity is high. I mean, the supply is high. Understand or not? The supply is high. So this is where you should entry. The price going up and then going down. It doesn't going up straightly, but it going up first and then shoot up and then going down. So this shoot up is called LQ, liquidity, looking for liquidity. So this is your compression. This is your CP. And you have liquidity on top of this. So CP, it will become CPLQ. I call it a CPLQ, compression with liquidity, or a CP plus takeout is equal CPLQ. It's a very, very good setup. Mostly you will win. I tell you what, this is a very, very good setup. Why? Because we have fake out. You know that the price will go up. And then when the price going down, there are no demand over here. It's everything already clear. So that there are bigger chance that once price going down here, it will go straight like this. So far, so good. So when there is no news, when there are no news, they will create liquidity. They will create trap. They will create manipulation, everything. So for example, we have this setup on AUD-CHF or not? No. This AUD-CHF. Last week. We have compression over here. We have compression. Price is going slowly and steadily, going up, going down, going up, going down, going up, going down. But over here we have resistance. We have R1, we have R2, even we have R3. If this is the case, then most probably price will go up, shoot up. After it shoot up, then only it will go down. Since it goes down over here, there are no demand over here. Those demand already clear, so the price straight away going down. So where you want to do your entry over here? Always look to the left. What do we have? We have a good QM level over here. High, low, higher, high, lower, low. Do you understand? You have QM, not this is not a QMR. This is a QM late retest. And another setup, another example is JPY, AUD JPY, CAD JPY. Over here. Price is going up, going down, going up, going down, going up, going down, going up, going down, and then suddenly you have double top over here. You have R1, and then you have R2. So it's a candidate for fake out, but always look to the left. What do we have? Always look to the left. What do we have over here? Oh, see. We have again another QM level. This is your QM level. This is your supply zone. So you have your entry over here, and then price straight away going down. Where are your TP supposed to be? At the early of this compression. This is what we call the first CP. I mean the first demanded clear, whatever you can call it. The first place where price going up start like that. Or you have a QM level over here. This should be good enough. Calculate the risk from here to here is around 16 pip. Stop loss around 17 or 20 pip, and your reward should be 100 pip. It's good enough. Okay, so far so good. This is what you call a CPLQ. Even though this is not a real CP because we have a gap over here. This already clear, is quite good. This demand zone already clear, is quite good. There are gap over here. This is demand zone. This demand zone already clear. Always watch out for gap, because gap is very dangerous. For example, you have a demand zone here, price going down, but this shadow doesn't touch this demand zone. So this demand zone is not yet clear. What will happen is when the price going down, it touch this demand zone, it will bounce back. You can see over here, the price bounce back up. Then if you are lucky, then the price continue going down. If it's not lucky, then if you are lucky, then the price going up like this. So always stand by with your stop loss, stand by with your break even, or you need to draw your demand zone clearly. Okay or not? Because we have like so many compression in the market, in the chart itself, but like this, there are a lot of gap here. There are CP over here, but there are gap over here. This demand zone has not been touched. You have CP over here. This CP already clear. Everything is clear over here. But wait a minute. A lot of gap over here. This demand clear, so no problem. This demand clear. What happened when price go through this gap is they will bounce back. It will bounce back. Like this, it bounce back, then a lot. So plan your trade carefully. We have fake out here, we have CP here, price going up. We have QM level over here. We have entry over here. So your TP, you have to make sure where are the demand zone that are not yet clear. Then the price surely will bounce back. So the choice is yours. Okay, you are Saleh asking, it will be interesting to see what will happen to New Zealand JPY on the daily. It is compressing on the way down. New Zealand JPY. Let me check New Zealand JPY daily. Okay. Wow. Wow, wow, wow. Daily. Yeah. It's going, it's a compression down. Let me then you need to find a place where wait for fake out over. Usually something like this, it will make a fake out or whatever. Because if the price want to go up for New Zealand JPY in one day, I think it is, I don't know if is it possible to go 300 pip to your TP over here. But just wait for a good opportunity. Maybe over here. Okay. New Zealand JPY. All right. Pavan is asking, sir, how some emergency need to move out. Sorry, sir. It's okay, no problem. I think we are finished. I think, do you have any question about CPLQ? We already finished this syllabus, but beware with this CP and CPLQ, yeah, because it's quite confusing. JPY, silver. Silver is already in the demand zone. Yes. Please suggest some good pair for backtesting. Sorry. For backtesting, you can use any pair. You can use any pair. You can use any time frame. Because backtesting is to practice your eyes. I mean, to practice and practice and practice, because you need multiple time frame. You need multiple setup. You need multiple pair, so that you will become. The more you make a back testing, the more you will get experience. The more you get experience, the more confident you will be. Okay, so there are no a specific pair to do back testing. As long as you find the setup, just draw. Find the setup, just draw. Just follow like what Haris is doing. For example, I give you one example, very good example. Let's suppose that Haris is sending AUD USD, is it? Last time? Let's suppose that he sent AUD USD M15 in the group. So what you should do is, you must draw yourself. Find AUD USD, M5, and then copy. This is the shortest part. I mean, copy his drawing, not copy and paste, but you have to draw yourself. For example, like you must follow what he's doing. Let's suppose, then you ask yourself, why did he mark it over here? Why did he entry over here? Why did he draw like this? Why? What is this? Why this? Maybe the first time you don't understand, but if you keep doing it, then later you will get the idea. Okay? Okay, Winnie. Actually, you can use any pair. If you want a faster one, use gold. But gold is too fast. It's too fast. You can use a slower one. A lot of slow pair over here. Yeah. So I would suggest like a slow pair, like the UCHF. The GBP is quite fast. The gold is very fast. The CHF one is slow. The Canadian also slow. The JPY also slow. The New Zealand also slow. So you can choose whatever it is. So as long as you make your own back testing, remember, yeah, you learn by doing, not by watching. By only doing, only you can get understanding. Let me see, WTI or whatever. Oh, USD JPY already reached. You see? Yes, I'm not afraid of a person who knows 1,000 kick, but I'm afraid of a person who knows one kick but practice 1,000 times. Yes, it's very, very dangerous. Once you become an expert, then there shouldn't be any problem for you. Seriously. Then you will gain, first you will gain experience, then you gain confidence. When you gain confidence, then you can start to entry big lots. You can start to grow your account. It's always like that. Okay. Is that okay, guys? Any more question? Do you have any question? If there are no question, if there is no question, then we should finish our lecture today, and we will continue next week. We will learn a very very good price action, which one of my favorite, what we call SR flip, the diamond, and SR flip and a diamond. This is also a good price action, a good sign that the price will reverse. SR flip never fail me. I tell you what, SR flip is one of my favorite setup. It never fail me. As long as I entry with SR flip, I will win again and again and again and again. So we will learn next week. Is that okay? Okay, thank you. Thank you for your time today.